Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Thursday, the 10th of August, 2023, 6:05 p.m. Central Time. So we get a report today that the press goes crazy with, as usual, and they trap you inevitably. The market's looking for going in, basically down 1/10 to 2/10 max on both the headline and or the core inflation. They get their 1/10. Market takes off to the upside. At one point, they're up 400 points in the Dow. I'm looking at this going to myself, I know I'm the lone nut out here that's going, why are these people getting so excited? Why are they saying this is going to move the Fed? And I'm watching people. The Fed is done. That's it. There is no reason to go further. So let me think. Let's assume that we're at 4.5% core inflation. And let's assume you fall 2/10 each month. In the course of a year from now, you're going to be at 3.6% inflation. Well, the goal's 2%. Hold on. Let's keep going. It would take 2 years at this pace, plus, to get anywhere near 2%. That's giving you the current rate of decline that the market is doing. And I know you're going to tell me, and rightly so, Ira, it's going to pick up. And I'm going to go, you're out of your mind. Are you looking at anything at all? What is one of the biggest components of core inflation? Rent, shelter, home, up 4/10. It's not doing what people thought. And what are you reading in the papers? You're reading that, no, many of the realtors think that we're probably troughing out right now and that the market is getting used to the fact that under 7%, you might see people coming into the market. They're back to the norm of understanding mortgages are probably going to run 4.5% to 7%. They're getting adjusted. I'm warning you, this is part of what is going on. The lucky people from the pandemic that were able to get 3% mortgages forever, they're not going anywhere anytime soon. First of all, there's no supply for them to move to. Number two, they're not willing so fast to give up those mortgages unless they have to. Just the reality of life. Then you want to tell me about gasoline prices on the headline number. Okay, it did go down in July. We were talking, I said the July 4th holiday is not going to be an event. We were right. Later in the month, you did see the market dropped one time. It started coming back late in the month. And look where you're at now. You're at $2.90. You're knocking on the door of going to $3. Have you gone and filled your car up? Is it cheaper? I don't think so. But that goes up and down. That is why it's called headline inflation. It's all over the board. What isn't is the heat in America has caused your utility bills to go up. On average, 13, 14%. Food costs are a variable. They move around. So what do we have? We have wage inflation that has slowed down, hasn't stopped going up. We have shelter costs that have gone up 0.4%, and we have inflation going down 0.2%, often 1/10, both headline and core. And you want me to think the Fed is through. Okay. Maybe the Fed in their wisdom will say it. We have a number of members that are saying, hey, if given the right data, I would go, and I'm speaking as a Fed member, and I could go for a pause. And we're having other members, you see it in Daly and Michelle Bowman and so on. No, we're not through at all, okay? This beast isn't beaten down, and the rate of the decline is not acceptable. Which one do you go with? Well, here's the beauty. You're going to get another CPI report. You're going to have 2 PPI reports, one in the morning, one a month from now, and you have another set of jobs reports coming. Have an open mind, but this idea, the Fed is one and done, and I'm looking at the CME watch page, the Fed watch page. I did a picture of it in my report for people. I'm going, there's now a 10% chance of a rate hike in September. I start laughing at it. Because that's the emotion of the market. That's what the Fed watch page is. It's not a guide for anything else. I've been around since this thing's been invented. It's the emotion of the day. What do the traders think now? Oh, there's the curve yield later. But an event comes out, it changes on a dime on you. Just understand what you're dealing with. When we look at the S&P, you're not down very much, folks. You're down 0.25% for the whole week so far. That's not very much. You've been breaking here. There's layers of support all the way down. The trend of the market is most certainly to the downside. You had an outside day to the down today. If you take out today's high, you have a problem. It is then a bear trap the way I teach outside days in my education course. If you go to our website, iraepstein.com, and you look education, you'll see outside days. If you take out today's high, Friday or Monday, the odds favor you're going right on up to the closest moving average and or a Bollinger Band. It's the average, the closest of. It would be back there. Barring that, what do you have? You still have a downtrend at work. Where's the potential support? Well, it's certainly the Bollinger Band. You got away from it today. You rallied. Now, if it drops again, it's coming in right through there. That would be the 44.65 level, 24 points lower. Will the PPI move the market? Probably. You'll get the emotion of the PPI right at the report time. I think it's 7:30 in the morning. We'll see what it does. Are you oversold? Absolutely. Would I tell a client of mine to go short in an oversold market? Zero time. Not going to happen. So I am in the bear camp, but no, this is not a zone that excites me. In the NASDAQ, embed, and I'll get excited. What does embedding mean? It means that you take these two numbers, and what they do is if they can stay under 20 several days or more in a row, that locks in a bear trend until the red line closes back over 21. Very simple. There are rules, though, as to how you go short with it, rules on how you take profit, if you get one, against the lower band, assuming you're going short when it's a bearish event. So we look at this, still, in my opinion, in the making, not there. When we look at the Dow, this is the strongest of the indices, but something big time is happening. Notice how the Bollinger Bands, which were all the way out here, have now narrowed in where they're right here. That's pretty important to me. It means volatility. I know you're not going to agree with this. The work says, the chart work, volatility is starting to come out of the market. You're starting to just spin your wheels right here. That seems to be it. When I look at the micro mini Russell 2000, bearish. Riding the lower band, I call that the gorilla glue trade because day after day you're hitting that band, but it's oversold. So I'm in the bear camp in 3 of the 4 indices. Not a surprise given my special report that I wrote. Remember that video report that you just saw? And I'm not excited on the bull side whatsoever. Okay. In the T-bond market, this market, if the Fed is going to stop everything that they're doing and you're going to see interest rates drop because the Fed's through raising rates, should be going up, not down. It's an inversion market. When futures drop, real rates are going up. Somebody's saying, that's not what I'm seeing. I get that. 5-year note, complete failure today. Look at how you have a big outside day down, but pay attention to that. Take out the highs of today and you open up the window to get back to the upper Bollinger Band before that low or whatever the lowest low you make right now is, if that high is taken out in the next 2 days. Giving you some things I teach in my outside day course. In the dollar index, you have an embedded reading. The pros, in my opinion, are buying, looking for up here. You have an outside day up, so I always look at an outside day up. When I see that, and if the market takes out that low, a trap has been laid. We'd call that a bull trap because the market's supposed to go up now, not down. You reversed back to the upside with an outside day. Take that out, and you get stop orders often hit, driving the market down to the next support zone under the market. In the eurocurrency, the battleground is crystal clear. Do you not see that it is the green line, the 100-day average up to the 18? That is your battleground. Now the market's going to see what does it do. It's hard to be short when you're oversold, so I'm not interested in that. In the British pound, all you did is come back to the 18-day average and fail. I think today is Thursday. At least 2 days this week, I've said that, folks, I'm getting more and more long-term bearish reasons on the pound. You can see how the market's failing. Others are seeing what I'm seeing. I think. I don't know. Bitcoin, again, like we're looking at the Dow, narrowing into the Bollinger Band, volatility coming out of the market right now. Can't answer why, but that's what's going on. And it gets hard to trade in there because you're looking for breakouts, and because you only break out of the Bollinger Band 5% of the time to the up or down. Let somebody else play that game. You got better places to deploy money, in my opinion. Now, in the Brent versus WTI, you finally got back up and you're challenging what we call the line in the sand. Is the market going to go and stay over that? If so, then what happens is Brent gains on WTI. Coming here is the correction. So the market came up and you could see what you're doing. You have your embedded reading. If the red line, closes under 79, I'd be telling my clients to come out of the market. Until that occurs, on the pullbacks, people are likely buying. Same thing in WTI. No. What's the number? You're not a buyer right now. Now you're on total defense. Why? Let's take a look. Where did the market close today? 84. Where's it at now? You got your first warning signal. Don't get stochasticitis. Make it prove it can close under that. But I don't think the pros are buying. I think when you get that at that point, they do what I do. I think they write algorithms, other things that say to themselves or teach that, we don't come in when the market's just losing a very strong pattern of momentum and it's starting to wobble. You're better off in the Brent, and that's what the spread is saying. When we look at rebob gas, okay, overbought market, trend up, not even strong enough yet to get up to there. So I'm a little concerned with it, but here's what I wanted to show you. In the month of July, you were in the 260s, okay? You're now, tonight, at 290. What do you think the next CPI report's going to say about energy prices unless they fall out of bed? This is what I try to show. Nat gas. Would I ever tell you to buy over an upper Bollinger Band or sell under it? It is never going to happen. And that's because you only stay out of those bands 5% of the time. This is called what Vegas is built on. The suckers are buying, it's going. You know what they were buying on? I'll tell you exactly. In Australia, there is a strike vote already being taken to hit and strike against Chevron, Total, and the other big gas developers. Out of Australia, they service 12% of the world's natural gas. Their primary clients are the ones right by them in Asia. Why did this take off? Well, if there's a strike, those people that need gas, they'll go onto the world market, and Europe desperately needs all the gas it can get to get ready for winter. What do you think European gas prices did yesterday, natural gas? Up 28%. Today they gave back some, about 9-10%. Whoa! I don't know where it finished. I didn't look at the end of the day, but that was the last I had seen. Just giving you an idea, and that picks up U.S. and other parts of it together. Now, one of the things I want you to do is think about this. You drink coffee, you go out every now and then, you get a Starbucks, a Pete's, whatever brand it is. For that one coffee cup, on average, you can get 22 days of videos from me. The videos will average about 15 to 18 minutes long. I publish them and record them actually at 5:15 in the morning, a.m. Central Time, and here's what we cover. 40 charts. We're going to look at all these markets, specific buy here, sell there. I'm very aggressive in what I do there. And we're also going to look at weekly charts. We'll do that on the weekend and during the week. And we're trying to catch some trades, ideally, if they can work, that are longer term and shorter term trades, not day trades. It's not what I do at all. So if you're looking for that, I'm the wrong guy. Swing trades. Longer term trades. Like today, I can tell you, NVIDIA, it finally came out in NVIDIA today. Had that on since, I think, June, something like that. I don't even remember myself. But different things. Now, I'm mentioning that just because that's in the ETF video, but it's the same thing. You go back and forth and you're trying to catch plays as best as you can. And we do get occasionally lucky and catch the big boy. Can you lose money? Of course you can lose money. That's what futures are about. It's 90% leverage. Do we take wild shots? Absolutely not. Not in my opinion. Will I be right? Yep. Am I going to be wrong? I'm going to have losers too. So if you're looking for honesty, a way to analyze this the way I'm doing, your coach. By the way, each subscription, you can write me, ask me questions. I will answer them. And if you ask me a certain thing that you need, I even create a short video for you so that you see it right there on the chart as I'm doing it. I get it right to you. I devote a certain amount of each day to do that. So how do you get this? You can call my staff. You can go to iraepstein.com. And in that, at any point, look at the word research. You'll see the different programs we have. You can also click up here. It'll take you right there. Again, a price of coffee. You think you can afford that? I'm Ira. You have a good day.